A not-for-profit media business is the way forward for Singapore Press Holdings to manage the consistent declines in print advertising and subscription revenue. The media company calls it the best and most appropriate option. And for more analysis, we are joined now by Associate Professor Lim Yee Fen from the Division of Business Law at Nanyang Business School. As a professor, after the restructuring, SPH will not be under the Newspaper and Printing Presses Act. So what does this mean for the company as well as its shareholders?
Well, that's a very good question. I mean, at present, there is a lot of information we do not have, and all this is still subject to regulatory and shareholder approval. But from the preliminary information so far, it does look like SPH is simply divesting itself of its media arm because the media arm hasn't been profitable and it has been negatively affecting their overall bottom line. And from what I can guess, SPH also wants to focus more on their property business. As we know, they have business opportunities overseas as well. They're in the student housing scene in Europe. They have their own large shopping centers here in Singapore and Australia. So I guess in short, investors would be investing in a media, no longer investing in a media or a news company, but the shareholders would be investing in a property company. Really, none of us really know where the SPH management are going. But I do hope that they do take some more interest in the aged care sector, where that is really, really badly needed here in Singapore. And they have already started investing in that area. And I guess probably for the company itself, SPH would be able to seek foreign investors quite freely and be treated like any other public company, limited by shares. But I guess for the shareholder, for some of the shareholders, the question might actually move well beyond the bottom line, as I'm sure that there are many shareholders who invested in SPH because of the public good that SPH was serving as a news provider in the many different languages. And not only that, SPH is a very large employer providing many jobs in Singapore. And some in the corporate world might actually even say that the company has corporate social responsibility towards the original aims of the company when it was first started, even though its profitability has diversified into other areas.
As you mentioned, Professor Lim, some shareholders may have invested in the company, seeing this media side of it as a public good. Would you regard media as a public good? And what's the best way to fund and sustain it then?
Yeah. Well, for my personal opinion, the news media is definitely a public good, as there is simply way too much fake news out there. And it's also rather disconcerting that people are getting their news from social media, which often contains a lot of falsehoods and blatant bias. So those who seek the truth need a reliable source from which they can obtain the information. As for the best way to fund it, that is a very challenging question, as SPH prints physical paper newspapers, which is a very challenging business proposition on its own in this day of the digital era. I think that perhaps a hybrid model of funding might be the best way forward. But you will really need an innovative top management to think outside the box to manage the entity well. So, for example, in the UK, the BBC is publicly funded through an annual licensing scheme that's paid by all users of the television and similar devices. But it has really strict rules on how to operate and the content, just to ensure that there's no bias and that there's total fairness throughout. And similarly, in Australia, the Australian Broadcasting Commission, the corporation, the ABC, also has radio and TV and online presence. And that organization just simply gets a handout from the Australian government. So it's taxpayer funded. So, but like the BBC, the ABC in Australia also has guidelines that it needs to adhere to in terms of reporting non-biased news and so on.
Also, Professor, something to take note of, that SPH's media business will operate under a company limited by guarantee. How would this model work? And I guess, what does it mean for SPH's audience?
That's a very interesting question. At present, there's very little information on what will become of the SPH media business or the CLG. But let's put it this way, from what the news reports, I don't think SPH Media, the subsidiary, can continue to be a newspaper company as defined under the legislation, because under the legislation, a newspaper company has to be a public company limited by shares, which both the CLG and SPH Media are not. So unless CLG can obtain exemptions from the government for every single one of its newspapers and publications, I think that SPH Media will no longer be a newspaper company at all. And it may be that the CLG and SPH media will turn into more of a documentary type media company or some other company that does not distribute its content at regular intervals. So sadly, if it goes down that road, they might well be job losses, lots of job losses. So, but it all is dependent on how the shareholders vote and the regulatory authorities as well.
And very quickly, Professor Lim, this is the most significant restructuring that we've seen in the industry since 1984. What does it say about the challenges in our media landscape?
Well, first of all, consumers nowadays just tend to consume free news everywhere, whether it's true news or fake news. And I think that the advertising model that has been supporting the news media over the many decades needs to be refreshed to make news media companies thrive. News companies need to strategize their operational and managerial processes so that they can actually reap a profit from new profit formulas. And also, I think another big factor is the big technology companies, they need to pay for their news. Copyright laws must be respected. It's as simple as that. Australia passed a law recently that required digital platforms like Facebook and Google to pay local media outlets and publishers to link their content in the news feeds or in the search results. And initially, these multi-billionaire technology companies objected and refused. But I understand that Google has since agreed to pay, which is the ethical thing to do. And these are not small amounts either. Like I think it's been reported that for one company alone, the amount for the contract was like over 30 million Australian dollars per year. And copyright laws were created centuries ago for a reason. So I think they need to be respected.
Professor Lim, thank you very much for joining us this evening. We've been speaking there to Associate Professor Lim Yee Fen from the Division of Business Law at Nanyang Business School.